Hi, my name's Kiara, and I work with Beyond 404 Realty. Today, we're welcoming you to buying your first home, or Home Buyer 101. We have with us today Anthony Hanks, who's a broker and owner of Beyond 404 Realty, and Stephen Tran, who's a mortgage loan officer with Hometown Lenders. And today, we're just going to discuss the basics about buying your home. So here's Stephen and all his information, and mine, and Anthony's. If you need to get in contact with any of us, you can just go back and pause that video and write down our information. So on today's agenda, we're going to be discussing what the fair housing commitment is, who comes first, your agent or your lender, the difference between customers and clients in real estate, and an agent's duties to their clients, investments versus forever homes, the home search, the negotiation process, when you're under contract, then what, the documents you use during a transaction, and what happens during a closing. First, the fair housing commitment. All real estate agents are required to follow the fair housing commitment, and it involves keeping our office and staff informed of revisions and updates to the fair housing policy, developing advertising that indicates that everyone is welcome and no one is excluded, and that we provide equal professional service without regard to race, color, religion, gender, disability, familial status, national origin, sexual orientation, or gender identity. So basically, the gist of this is that everyone's welcome and we don't discriminate against anyone. So, what comes first, your agent or your lender? Step one, you're going to need to talk to a lender to find out where you stand financially. Then you're going to need to find out what types of loans are available to you. And then you're going to want to take a hard look at your credit score and your credit history. And at this point, I'm going to turn the presentation over to Stephen, who's our mortgage loan officer and the expert on this.
Thank you so much, Kiara. And from a lender standpoint, there are going to be three primary qualification factors that we're going to be looking at to qualify you for your first mortgage. The first factor is going to be your income. Ideally, we want your income to be about 150% of what your liabilities are going to be. And when it comes to income, there's different type of incomes that can be used qualified and some are not. The ones that can be qualified is going to be your basic hourly pay, your base salary. When it comes to commission, bonuses, and overtime, we do need a 12 to 24-month history in order to use that to qualify. So you keep that in mind when you're kind of reviewing your own income to see if you are ready to buy your first home. When it comes to credit, we need a minimum of a FICO score of 580 for a government FHA, USDA, VA loan, and you need a 620 for a conventional loan. And on your credit, one thing I want to talk about is going to be your liabilities. Your liabilities is what's going to determine your debt to income ratio. And that is also going to include your upcoming mortgage payment as well. When it comes to your liabilities, one thing you want to consider is going to be your installment, your revolving debt. Some type of debt that you can exclude is going to be your charge off, collection if it's under a $2,000 balance, and medical bills. Those you can exclude from it. Student loans right now, you do have to work out a payment plan in order to count those against your debt to income. And third is going to be your assets. Assets is just referring to your savings for this home. Because keep in mind, when you're saving to put down on a house, there is still going to be a closing cost involved. And the more money you have saved up, the better it's going to make you look to the lender, that you have some reserves aside to go into this house without depleting your entire bank account. So when it comes to assets, I always recommend a down payment and a good 3 to 5% extra to cover for your closing costs. And one thing you want to consider when you're looking at buying your first home or your second home, whatever the case may be, is what is a comfortable monthly mortgage payment that you're willing to pay. People who are looking for a $400,000 property do not really have an idea on what their monthly payment is going to look like. So I think this is a great starting point for you home buyers to kind of look at, to kind of calculate how much you want to buy. So let's go over the breakdown of the mortgage payment. The first part is going to be your principal and interest. That is a fixed amount that's going to be factored by your interest rate and your loan amount by the lender. It's going to be a fixed rate that won't change for the life of the loan. The second factor is going to be your home insurance, and it's going to vary depending on what insurance company that you go with. Third is a property tax, and I think this is going to be a big deal for a lot of people who are coming in from out of state, because property taxes will vary from a lot of different states. And out here, tax rate tend to be around 2.2 to maybe 2.7% in the DFW area. It makes a good portion of your monthly payment. That's where it's going to differ from other states if you're used to having a mortgage payment that's $1,000 to $1,200 a month. Fourth is a mortgage insurance. This insurance here is to protect the lender if you are putting less than 20% down on your mortgage payment. This is to protect the lender in case you default on your monthly payment. They are able to file a claim and recoup their losses. The fifth portion here is not going to be included as part of your monthly payment, but it is part of your liability. An HOA can be paid either annually, semi-annually, quarterly, or even monthly, depending on the community that you choose to buy your property at. That will count towards a liability, but typically that is going to be paid separately.
Okay, thank you, Stephen. And so now I want to talk to you about the 5 stages of home ownership. So I'm going to start at the bottom and work our way up. So first thing that I want to talk about is realization. And that's the moment that you realize that maybe you want something different. You're living in an apartment. Maybe you are living with your parents or somebody else, but it's that realization that you need to do something. Application. That's when you start, you get out, you look, you find your agent, you talk to them, you get a plan, and you move forward. The next level is discovery. This is where you go in, you're finding the different houses, you find the one you want. The fourth thing is negotiation. So you've decided to buy and you're negotiating the house or the property that you're wanting. And last, ownership. And just getting the home. So today, the statistics are showing that 78% of people want to own a home. And that same percentage, 7 out of 10, currently rent their homes where they're staying. As you can see from here, the cost of renting versus owning could be substantial. So if it's possible, you want to move towards owning. So how is a first-time home buyer defined? In our industry, we defined it as the buyer who has no ownership on title for a property in the recent 3 years. So that could mean that you've never owned a home. It could mean that you've been out of a primary residence for 3 years and now you want to get back into ownership. And there's some other particulars around maybe possibly of divorce. So what are the agent's duties and responsibilities? Well, it depends on you. So in real estate, buyers are considered either customers or clients. Now, that might sound like their customer and their client are the same thing, but we define them and treat them differently. When a listing agreement is created between the seller and the agent, it binds the real estate agent, both the selling and the buyer's agent, with a fiduciary duty to the seller. What that means for you is that if the agent has to represent the seller's best interest, to represent you, there needs to be a buyer's agreement. So a buyer's agreement is a legal agreement between the broker and a person interested in buying a home. And with this contract in place, that fiduciary duty that a buyer's agent would have to the seller moves to you. Now, you might think that, oh, well, I thought I was a client without signing that, and that's not the case. You need to have this legal document signed. So an agent has the responsibility to a customer to be honest, accounting, any money that you give an agent, like earnest money, they are supposed to keep an accounting of it. Reasonable care, skill and care, treated respectfully, and any disclosure of material defects on the property that is being sold. Now, a client, they get a fiduciary duty by signing the listing or the buyer's agreement. You get obedience, you get loyalty, you get disclosure, confidentiality, the same accounting, and you get a reasonable care and diligence. So now this agent is representing you in your best interest. So the other thing, next thing is when you're looking at a house, I always like to think of, is this a forever home or is this an investment property? And by investment property, what I mean is this home getting you from point A to point B? If you're going to look at a forever home, you look at it differently. You can accept certain things. But if you're looking at this as an investment home, you may want to look for a home that you can get some equity and appreciation in by making some renovations. So this property, or even in a location that can grant you that equity and appreciation, so that you can sell that house in a few years and move to the next house. So what are the things that are important when you're doing your criteria? The biggest, most of the time, the biggest consideration is location. The next is what type of home. Is it a single family, a multifamily, a townhouse? Maybe it's a condo, or even new builds. How many bedrooms and bathrooms is it going to have? Is it going to have any garage space? What's the yard space? And then considerations for pools and other amenities. So kind of a quick excursion to kind of look at new builds is there's a lot of new builds that are out there right now. The construction is high. And the benefits of a new build is the low maintenance costs. The newer houses are more energy efficient. You get a home warranty with it. They have modern floor plans. You're not going to be going in and having to move things around to suit you. It's move-in ready. And sometimes if you get in early enough, you get to make some of the design decisions. And there are a few of the builders in our area, but there's a ton more. So what do real estate agents use? So these are a few of our tools: the multi-listing service, or the MLS, the Realtor's Property Resource, the RPR, and then creating CMAs, which are the comparative market analysis. So I belong to the North Texas MLS, and this is kind of shows you that there's even more tools than what I mentioned. Next. So this kind of gives you an idea of what the multi-listing service looks like, the back end of it. And we create the auto emails that have the homes that come up meeting your criteria. There's some reporting, keeping up with contacts and stuff like that. The Realtor Property Resource, it's actually a really nice tool. It's like a CMA on steroids. It creates some really nice reports. They revolve around, you can have them for history, property details, comparative analysis, history, just a really nice tool. And then we have the market, comparative market analysis. Now, there's several tools that we can use to create these reports. This is an example of Cloud CMA. It basically goes and grabs all this information and creates you a pretty report. So negotiating the offer. So you found the house you want, and now's the time the agents kick in and they work on negotiating the offer. So we right now are in a seller's market. So some of the strategies that we could use to increase your odds of winning the offer, one would be to pay for the title policy insurance. Another is to pay for the survey if a survey is needed. Normally, we ask for a 7-day option period. We could lessen that down a little bit if you're more comfortable with the house. Cash offers are when and where it's possible. Include a personal letter with your offer. Sometimes people are selling their houses not just for the money. Sometimes they want to make sure that their house is being used by somebody that's going to take care of it. So sometimes a personal letter goes a long way. And going and getting pre-qualified, having that approval ready to go. So the offer gets accepted. So now what? Well, the two big things that you're going to be looking at is an inspection and the appraisal, as well as the walkthrough and the closing date. Now, the inspection is during the option period, and it just goes over and you have somebody go through and look at the house and look for any problems that they can find. And then after the approval process, they'll have an appraiser come in and make sure that the value of the house matches up with the price offered. Towards the end, we'll do a walkthrough to make sure that everything is still satisfactory. And then we have the closing day. And during that time, the title company and the mortgage company are doing all of the work necessary to get ready for that closing day. So just kind of touch on a home inspection, kind of what to expect. And, you know, when you have the home inspection, invariably, they always come back with a lot of different, what they consider defects. And when we look at those, we need to kind of categorize them. And what I like to think of is things that we can live with, things that we might want, and then things that we can't live with. So you're going to have sometimes maybe come back and they'll have a defect where there's not enough dirt up against the house, or maybe there's too much dirt against the house. Well, that's not going to keep us from moving forward. There may be times that maybe you can ask for the replacement of windows. It doesn't mean that you're going to get it, but you can ask for it. And then the things that you want to make sure that you can't live without is like if there's problems with the air condition, there's leaks, foundation problems, those things need to be addressed. So if you look at this is an example of what a report might look like. They will go into the house and they will take pictures and they would come back and give descriptions of the defects. So kind of just some of the documents that you might see. The first document you should see is going to be the information about the broker service, which is basically information about the agent, the broker, and the brokerage. And then there'll be some key terms on there that you can look at. The residential buyers and a tenant agreement that we talked about earlier, hopefully that you'll sign that. You're going to see the 1 to 4 family residential contract. That's the offer itself, and it outlines all of the different requirements and, you know, the things that you agreed upon. You have the third party financing addendum. This says what type of financing you're going to have and then how long that you're going to need to get it approved. And then another document is the wire fraud, because it's become a problem here in the last few years. And then if the house was built before 1978, you will have a lead pamphlet about lead base, and you will sign a document saying that you've got that pamphlet. So what happens during closing? Well, the day of closing, you'll have a wire transfer, which is the closing cost and the down payment. You'll sign the final documents. They will go and make copies of the loan documents and deeds. And then hopefully once it's funded, that's a key word, funded, you will get your keys. What happens after closing? Well, you've got to consider moving, your first tax bill, your first mortgage payment, and you're setting up your utility billing. So as we kind of close this out, I would like to say awkwardness brings change, and this change may bring feelings of uncomfortableness, but also of excitement. The benefits of home ownership is knowledge that you own a little corner of the world. You're going to possibly get income tax deductions. If you sell this, you may end up getting capital gains exclusions. And there's also opportunity to build equity by appreciation and paying down of your mortgage. So are you ready for home ownership? Are you ready for this awkward change? The question to you is how can we help?
And here's
Um,
a little bit of
Go
all of our
ahead.
contact information, and we look forward to getting in touch with you.
And is there any questions at this point?